Hi, everyone, and welcome to episode 12 of The Bottom Line. As always, I'm joined by my co-host, Syed. Today, we have a very special episode for you. We're going to, as always, start off with a tech update. Syed's going to also transition into a discussion on open source intelligence, otherwise known as OSINT. We're going to talk a little bit about why Biden's stimulus plan may actually disappoint. We're also going to talk about our stock picks for the upcoming week, and we're going to end off with Q&A basically of the fan mail that we've been getting. Like we mentioned in our previous episode, we're going to be reading some of the questions you guys have been sending our way and trying to answer them as best as we can. So with that being said, I'm going to pass it over to Syed, who will give you your tech update.
Hey guys, hope everyone is doing well. So to begin the tech update, I want to announce that CRA, so the Canada Revenue Agency, they locked around 800,000 accounts due to a data leakage, and this data leakage was due to a phishing campaign. So it's an interesting read, so be sure to check that out. It was all over the news, so CBC, CTV. Again, links in the description below, so be sure to check that out. Next, Microsoft Exchange server bugs are still getting exploited. So we didn't mention it. I forgot to mention it last week, but the Microsoft Exchange servers, so their email servers have been they've been target of like threat actors, and they are doing a fairly decent job of securing them, but like they're still being targeted. So they fixed a vulnerability recently, and but they're still under attack. They could be under a potential attack. So again, a good read on that. So again, link will be in the description for that. And then for those of our viewers that use the browser called Brave, Brave is a privacy focused browser, and it launched its own search engine this past week. So again, competition to Google there. We'll see how that goes for them. And then I was reading one article regarding Netflix and how they're cracking down on shared passwords. So I guess no more sharing passwords with your friends or family for sharing one Netflix account, right?
So I was actually very disappointed hearing about that, because I'm guilty of doing that with my family. So.
Yeah, of course, man. Aren't we all? Yeah, aren't we all? I'm sure everybody can relate to that. But yeah, that's an interesting read. And then also a company called Verkada INC. So it's a startup in the Silicon Valley who collects security camera footage. They were hacked. And as a result of this hack, their footage of Tesla and also jails and hospitals were exposed to the hackers. So again, link in the description below. So be sure to check that out. And that pretty much wraps up the tech. Now moving on now to open source intelligence, or OSINT. So this is something that I work with, not in my primary job, but like as a side thing, as I love the concept of open source intelligence. I volunteer with this company called TraceLabs, and we use open source intelligence to find evidence about real life missing people, which is a cool thing in my opinion, because you get to use your skills to help for a good cause, right? Again, all of these findings go towards a great cause, and these people are able to return to their loved ones as we were able to find their location. That was a side story, but like what open source intelligence essentially is that you're essentially hunting for information. Now, the example that I mentioned, like the initiative I'm involved in, is essentially called People OSINT. And there's also Business OSINT, where you're trying to crack down information about a business. And then there's also People OSINT, like I mentioned. And then there's also, you can do that with pretty much anything. So a simple Google search, finding information on Google, can be OSINT, right? So anything that's publicly available. And the thing is, like the web is like so wide and deep that you might not even know that information's out there on the web about you through social media. Social media is a big one. like I'm sure you can go on social media, do an advanced search, and you can find like a bunch of information. So that's what open source intelligence is. Essentially, it's a great way to like gather information when you're investigating, and it can be used for bad purposes. But again, it also has a good side to it too. And if you're authorized to investigate someone, by all means do it. And like you can gather passive intelligence, and it really helps in an investigation. The reason I'm mentioning this is because my team my team that we participate in these competitions with at TraceLabs, they would like to come on the show as a potential guest speaker, and we would love to welcome them on the show and talk more about like what we do. And so two of them are from the UK, and then one of them is from Denver, Colorado. So again, would love to welcome them on. And I wanted to introduce the topic here just as a brief overview of how OSINT works, what open source intelligence is. And again, business OSINT is something that's pretty big too, as companies use that to track down what's being said about them online, right? Like many of the big companies probably have like a group of people associated just to hunt the web and see what's being said out there, what's being said on the dark web, and then that makes them aware, right? Of what's going on. So that's where OSINT can be used. But to give you guys a better example of how like OSINT would work, I want to kind of do like a little demonstration. Just a little disclaimer before proceeding to the demonstration. For those of you streaming the podcast as an audio, please refer to the YouTube video to follow along. Thank you, and I hope you enjoy the demo. The question would be here to locate the location of this image. We could even say locate the exact location of this image, where this image was taken. So first things first, just with the naked eye, one would notice that there's this area code right here on the bus, at the bus stop near this sitting area. It's a little sign, and it has this phone number right here. So you can search this phone number directly, or you can search the area code if you want to take little steps, right? Just straight off the bat, when I would look at this, maybe because I know that 604 is an area code from the Vancouver area, that would help me a lot. But again, if you don't know your area codes that well, you can simply just put it in a search engine such as Google, Yandex, DuckDuckGo, and you'll be able to find out, right, that this is an area code in the Vancouver area. There's also the name of the company that's advertising this. Not really clear, but it looks like it starts with the N, and there's a T and an A and an N. So that gives you a bit of a hint too as to what this company is, like what their name is, and you can go from there. Or simply, if you wanna like skip a few steps, and you could just put this number into Google or any search engine, and you can possibly find out their exact address. Normally when there's signs like these for companies, right, these companies are publicly listed and available, right? So when you search for their number, you can find their exact address, and then that can help us narrow down to a specific city. And also, one thing to note with these signs is that they're usually put like close proximity to where the actual company is located, right? Like they wouldn't put it far away, right, from their office or their main headquarters. So that's one thing to note. So this McDonald's is really near the location of this company. Also, another thing to note here is that there's this bus stop right here that's right in front of this McDonald's. So once we find the location of where this is, right, like a city, then what we can do is we can go on Google Street View, and we can search all the McDonald's in that specific city, and hopefully there's not too many. But if there are a lot, we can narrow down the number of McDonald's by looking at Google Maps and seeing which one has a bus stop right beside them, and then we can narrow it down from there. So let me show you how I would. So just for starters, beginners, we're gonna start with simple Google, right? So we're gonna search this number right here. This number right here, right? We're gonna search it, and we'll see what we get. So I believe that's the right number, and yes, it is. So interlink reality, and if we zoom into this picture right here, right? Interlink, yep, that looks like interlink, and so this is it. So now let's click on the first link. And right here, you can also see, so the address that this is in Richmond, BC. Now we have our city, because I knew for a fact straight away, and you can even, that's why it said to start out with like just Googling the area code. It's not just Vancouver. Like Vancouver is a huge city, right? You can pretty much, like, you would have like a whole area to search, right? So the key is always to narrow down your location so it's easier to search. So now we know this is in Richmond, BC, right? And so now we would just go to Google Maps. So let's go to Google Maps, and okay, now we're gonna type in McDonald's. Richmond, BC. Okay, so this gives us all the McDonald's near Richmond, BC. Now, there's a bunch of them here, like not a lot, but like just to save some time, we saw this bus stop right next to this McDonald's, right? So now we can just look on Google, zoom in a little to this McDonald's. Whichever one of these McDonald's has a bus stop beside it will be our location, and we can verify that with Google Street View. So this one right here, this McDonald's has a bus stop right beside it. This could very well be our McDonald's in this picture, right? So let's try Street View, and let's check it out. Okay, so this picture right here, it looks like this is our location, but let me just try to see if we can go Street View here. There it is. Now let's click this icon right here, and there's that tree right there that we saw in the picture. Now let me see if we can get like an actual street view of this place. That would be great. There it is. Okay, so now let's try to turn this a little around. Now we're going in there. We're going past the McDonald's right here. We need to turn right. So we're gonna go back. There's that bus stop, I'm pretty sure. The blue pole, I'm pretty sure the picture was taken from somewhere there. And if we turn to the right, here is our McDonald's. This is our McDonald's right here in this picture. Same McDonald's. It's the big McDonald's sign, blue pole, the same bus stop. You can see that they got rid of the Metro newspaper bin right here. But so now we have the exact GPS location right here of this where this picture was taken, where this McDonald's is. So right here, this is the longitude and latitude. Just paste it right here, and this would be your exact location. You see, it gives you the exact location of where this picture was taken. So this was just one example I wanted to show, just to like share with our viewers on how OSINT can be applied into investigations. Of course, you can do that with people too, like go through the social medias. There's a bunch of tools out there. So say if you know like say if you have Twitter, Instagram, Facebook, right, and you use the same alias, right? So I guess for you, Deepak could be your first name, last name, right? Use the same one. You can run it through a tool, and you could be like, oh, run it through all the social media sites, and it'll tell you where you use that alias, and it'll tell me. So I don't have to like go searching for it. So there's like a bunch of tools out there you can use. It's pretty incredible. Yeah. So you can hunt down people too, like that. And then of course there's the dark web, which is a whole nother topic. Even I'm a beginner on that, still learning, lots to learn there. But dark web is another place where you can find a bunch of stuff, and it's incredible, man. And this is OSINT's like something that I feel like everybody should have know what it is, because once you know how vulnerable you can be with all the data that's out there, then you would take measures to protect yourself, right? Protect your social medias. Don't use the same aliases on all social medias so someone can track you down, right? It's just simple stuff like that, man. I've even seen like resumes leaked online where people found another subject's address and stuff. Like, it's incredible, man.
Wow. Yeah, no,
Yeah.
that's crazy. And not to deviate too much, but they've made a lot of movies on that too, right? The dark
Yeah,
web.
man. Yeah.
Series of that
Yeah.
too. Like, that's an extreme case, but you're right. Like, your information can be anywhere, and you really don't even know, right? So this is just an example of that, but that's absolutely crazy for sure.
Yeah, and we'll get TraceLab members on here, and they'll talk more about what we do, and it'll be fun. We can all learn something new from their perspective, and yeah, it'll be awesome getting them on. We'll let you know when they're coming on. It could be an exclusive. They could just come on a weekly episode, but yeah, we'll let you know when. So now we're gonna talk about the new stimulus fund that was announced in the United States. So Deepak, the floor is yours.
Thanks, Ed. So just talking about that stimulus package, it was a $1.9 trillion package, which was in the works for a while. The market reacted positively to it. So everyone thought, coming out of this period of decline, the stimulus would be the next catalyst for a move higher. So obviously market sentiment was pretty good this week, but I wanted to reference an article that I saw on investing.com. Basically, the article, and we're going to provide a link to this in this description, but it basically talks about how the whole stimulus, like, while people think it's going to keep the market like above, like it'll keep it afloat, I should say. Really, what's happening here is that the very intent of the stimulus package is to support the economy first and foremost, and then small businesses. But what I feel like is being misplaced here is the fact that you don't know when the next package comes out, right? Like, this package took a while to get approved. There was some concerns about the amount of the package. So business owners don't really know how much stimulus they're going to be getting, right?
Mm-hmm.
So when they do get these stimulus checks, they consider it like a one-off incident, right? It's not like a CERB payment where they're getting it every single month indefinitely, right? Like, the tap is going to close at some point. So everyone that was laid off or furloughed, in a way, it doesn't really benefit them, right? Like, if these small businesses are getting all these checks to help hire more people, really, if it's just a one-time check, or it's a check that they know that it's not going to be coming every single month, as a business owner, you're not rushing to go hire someone, right? Because you're trying to protect your existing business rather than grow. I don't think many businesses, unless you're in certain industries, are in the mode to grow right now. It's more so very defensive, right? So I don't necessarily think that these stimulus checks are helping boost the economy to the effect that people think it is. And another thing that you're starting to see here is that because of the increase in money supply, there's going to be a lot of inflationary pressures, right? And that's part of the reason why the interest rates have been going up, because obviously the interest rates are used as a way to control inflation, right? But if you keep increasing the money supply, what's going to happen is you're going to have to boost these rates higher and higher and higher. Okay, so as you've already seen in the markets, as the treasury yield has been going up, the market reacts negatively to it, right?
Right.
So you're seeing these sort of things like, okay, the market reacts positively initially, at least when these new stimulus deals are announced, but the market also seems to panic when they see the yield rising, right? You can't really have it both ways. So I feel like the novelty has kind of worn off, because initially when everything was shut down, we're like, okay, yes, the relief package is going to help keep the economy afloat. But now it's shifting towards, I think the market's already priced that in. And now the market's getting shaken up by the fact that, oh, the yields are rising again, right? And that's why you saw the massive drop in the NASDAQ, which we've mentioned in previous weeks. So I don't know how much longer you can continue to use this as the catalyst to move the market to all-time highs. And this is why, in the short term, I also think a larger correction is due, right? Because we're going to start to see much higher yields coming back in. It's going to keep climbing to combat those inflationary pressures. And at some point, they're not going to give you a $1.9 trillion stimulus deal again, right? So if the stimulus stops, then you lose all your catalysts, right? So again, I think there's a lot of moving parts here, and the article will go into it in a lot more detail. But really, I think the market is running out of catalysts, and we have to shift towards how do we get the economy roaring again, right? And reopening helps with that, but I think there's still a lot of uncertainty with the COVID variants going on, especially here in Canada, because I don't think we've done a great job with the vaccine distribution. I think we're doing the best we can, but we are constrained by timing, right, and supply. So and you see other countries around the world are going back into lockdowns to combat these rising cases. So I don't think we're totally behind. COVID is not totally behind us, right? So I think there's a lot of concerning elements within the market. So that's why, and we'll talk about this a little bit later in the segment as well. I don't think the stimulus is going to help much longer, and I do think a larger correction in the markets are due.
Yeah, so I was reading an article. I think it was CBC or CTV, one of them, and they said that the CERB actually helped the Canadian economy during this pandemic. Again, from what you said, I would think that this is like a short-term thing. It wouldn't help in the long run, right? Because again, it is a type of stimulus, right? And also it's like a fixed amount. So say if you're making more than like what the CERB is giving you, right? You're not gonna get your income back. Basically, you're only gonna get that fixed amount. So yeah, what are your thoughts on that?
Yeah, I mean, again, I think it was important for the government to step up, especially in the early days of COVID in like March 2020, April, May. Like, I think the government did a phenomenal job of stepping in and reassuring everyone that it's going to be okay. We'll get through these times. So I think that helped initially. But I think where we are now, I think the novelty of that has worn off. And the fact that, like you said, if you were a high earner, even on an individual scale, let's not even talk about small business right now. Even as an individual, if you were making $60,000, $70,000 a year, this $2,000 a month check isn't going to cover it. So now your spending is going down, right? So you're not able to spend as much as you normally would. And what happens when you reduce spending? It's putting downward pressure on the economy. So I certainly think it helps, but I think we need to focus on how we can get unemployment down even more, right? Like, I think that needs to be the focus. How can we ensure a swift economic recovery, right? And initially the answer was, let's just give more stimulus. But I think now we have to shift towards, okay, beyond the stimulus, what can we do to help facilitate small businesses to expand like they were pre-COVID, right? So I don't know the clear answer to that question, right? But I do think that we have to find another way. And
vaccine rollouts and getting stuff back to normal, essentially, right, would be the clear solution, but it's not easy as said, right?
Exactly. Like I said, the vaccine distribution, the efficacy, if there is another variant, like we're not totally ahead of COVID, right? Like, COVID's still a thing in our society. So we haven't moved past that stage yet. So I think there's a lot of moving parts here. I don't think the stimulus will be enough moving forward. I think we need to find a way to help small businesses go digital, for example. A lot of financial institutions, again, like, they were encouraging small businesses, like, how do you go from brick and mortar to having an e-commerce presence, right? Like, I think you need to have a fundamental shift in business strategy to help ensure that you're still growing, right? And you have to be very flexible in how you operate now. I think that's going to help a lot more than a $2,000 check will.
The problem is there though. These small businesses, do they have enough funding to go all remote, and then they have to worry about like cyber stuff, right? Like they gotta. Like, I don't know if they can afford that with even with the stimulus package. I don't know if they can afford going fully remote, right? Like there's a certain capacity, and like these remote Cisco like is a common VPN provider, right, for many of these companies, right? And they charge a lot, man. And I don't know if these small businesses can afford that, to be frank.
Yeah,
And it'll be interesting. Like I don't think that's a great solution. Like for big companies, it's not a big deal. Like they'll have like a minor setback, but they'll be able to bounce back, right, and get all their employees easily on like a
yeah,
remote network. But
yeah,
here, like I don't know if that's possible. So I think the best solution is get a rapid rollout of vaccines and
yeah.
hope that there's no variants, and go from there. Like I don't
I,
see another way around it.
I mean, obviously scale has a lot to do with it. Like you said, some services are pricier than others, but
Hmm.
I don't see why a small business can't have an online presence now. I think there's so many tools available to them.
Hmm.
Obviously, cybersecurity will have to be a big part of their budget. But
Hmm.
again, if you want to grow and evolve your business well into the 2020s and then the 2030s and beyond, you have to be ahead of the game. And where we're trending is if you don't have an online presence, you're kind of like you're just archaic and you're just going to get pushed out. And you saw a lot of small businesses didn't make it through the initial stages of COVID. So the ones that
Yep.
were able to adapt are still thriving. The ones who weren't, unfortunately, they're out of business now. So again, like it's really difficult. It's not a one hand fit like a one size fits all solution, but I mean, again, like being flexible in this day and age is critical for any small business, large business, whatever you want to call it. I think if you don't have a business strategy that's evolving with the economic times, you're going to be in trouble regardless of whether you get a $1,000 check, a $2,000 check, or a $5,000 check. That's just my
Absolutely.
stance on it.
Yep.
Obviously, everyone has their own opinion. That
Yeah.
being said, now said, I'm going to toss it back to you for our next segment of this episode, where we're going to share our top picks for the upcoming weeks. So go ahead. What do you have for us?
So I posted this one on our IG, the Graph Blockchain INC, ticker GBLC, on the TSX. It's an altcoin miner, and I see the stock rising. Note though, penny stock, be aware. It like again, we always say this, gonna say it again. Always do your due diligence, know your risk tolerance, especially with these stocks. It is a penny stock, but they have a solid blockchain proof of concept, and I see the stock rising in the short term because they acquired Polkadot and Cardano, and those are two altcoins we mentioned in our exclusive. So remember to check that out too. That dropped a few days ago. So if you want to learn more about those coins, but back to these guys. So Graph Blockchain, they acquired Polkadot and Cardano. You can read more about this company in the links provided below in the description, so be sure to check that out. Now that's a short-term thing, so away from penny stocks now to something that are a little bit more friendly for long-term investors. Saw Facebook, Spotify, Tesla, and Square bouncing back this past week, as well as many others. On the Nasdaq bounced back pretty well this week too. Saw a bunch of greens, so that was great. But I think for these stocks specifically, so once again, Facebook, Spotify, Tesla, and Square would be a good time to increase your position or just hold strong. I don't think panic selling is the way to go with these stocks. Even like you can add Apple to this list too. Just hold strong, and I feel like you'll be a happy camper. But those are my picks. What about you, Deepak? What you got for us?
Yeah, so actually, instead of because you've already talked about some of the high end names, I'm going to go a little bit out of the box here. So I think the theme for my picks right now are the recovery play because everyone's looking forward to a strong recovery now.
Hmm.
But I also wanted to play a little bit on that short squeeze theme because I think last time I checked this week, GameStop's back at like $250 per share. So the short squeeze seems to still be in place. So with that being said, I have three stocks that I wanted to mention. The first is Ashford Hospitality Trust. Okay, this is an upscale hotel REIT with a low price to sales of 0.24 and 1.77 in cash per share. It's AHT is the ticker. And again, hotels, right? If there's a recovery, a lot of people are going to be wanting to travel, and hey, that's good for the hotel business. So keep an eye out for that one. The next one I found is Burke's Group. So I don't know. I think a lot of our viewers might be familiar with it, but like if you go to the shopping mall, you might see a Burke's around the corner. But it's a luxury. They call it a luxury jewelry store. Again, their sales have really suffered because hey, COVID. Who really needs to buy expensive jewelry, right? So it's more of one of those hidden gems that I think could play out because hey, if the economy recovers and everyone's out and about shopping. Okay, jewelry.
What is it at right now? What is it at right now? How much is it trading for? Do you know?
I think it's $3.20 last time I checked. I don't know what the closing price was on Friday.
But okay, not bad. Not bad, not bad.
Yeah. So these are actually cheap stock plays because when they're lower in the penny stock range, as you know, there's a lot more volatility going on with these. You could see higher returns, but again, there's a lot higher element of risk on these ones, right? So my third one that I'm going to quickly talk about is Chico's. I think I'm pronouncing that correctly. Ticker CHS. It's a women's retail chain. Again, it's similar to the Express play because if you remember, Express was another one that really just went ballistic as part of the short squeeze. So again, I think this is another one. Retail was something that really suffered because of the pandemic. Opening up, you see a lot of those retail stocks going up, like JWN Nordstrom went up significantly already. This is another one of those that I think is lagging behind. And hey, you never know, right? You could see a massive move upward. But again, I don't want to sell anyone on like a pipe dream. There's a huge risk involved in this, right? Don't think that, hey, I'm going to dump my money in here and it's going to go 5, 10x right away. Just don't be under that false assumption. This is just hypothetical. Again, do your own research, do your own due diligence, and understand that at these prices, they're considered penny stocks and there's a lot of volatility here and you could lose a lot of money if you take a fairly large position. So just be careful. This is just some stuff that I found out through some research. Hey, these could be the next targets of Wall Street bets. So just keep an eye out. Maybe it's on your radar. Maybe you want to take a swing. But again, keep in mind your risk tolerance and keep in mind you could lose money if it goes sideways.
Hey man, are you a member of Wall Street Bets? Are you trying to promote these stocks so people buy and you can take advantage? Just kidding.
I would have liked to be part of Wall Street Bets, but I think I don't think they would admit me in at this point. So
hey guys, don't listen to Deepak. Don't listen to Deepak. He's a part of that short squeeze. Don't listen to him. Jokes aside, as we always say, do your own due diligence and know your risk tolerance, because these stocks are risky, and same with the ones I mentioned too. They are very risky, and you don't want to lose your money, right? So we keep reiterating this fact, and we're gonna keep doing it because I feel like it's crucial for our viewers to understand, to not lose their money and throw their money blindly into the market or in anything for that matter. So
exactly, and I do want to qualify this again. I do think that while we have some reprieve in the market, I think a larger correction might be looming. So just be cognizant of the fact that you don't want to have lots of your money in these very volatile plays because anyhow the momentum gets sucked out of the market, these ones get hit hardest. So again, just be careful. I don't have a significant position in these types of stocks. I never have and I never will. So I always make sure that most of my stock picks, especially in an environment where I feel like a larger correction might be imminent, I try to keep my portfolio as safe as possible, and I recommend our viewers to do the same. But again, if you want to have like a swing trade or whatever, then you can consider this.
And now it's time for our newly implemented segment called Fan Mail. So here we're going to answer all your requests and questions that you guys have asked us. As we always say, we want to get back to you guys and educate you guys. So this one's for all our viewers and supporters. So the first question, as seen on your screen, was one of our viewers suggesting they would be interested to discuss whether GameStop has any viable pivot options to recover from certain doom. So I think Deepak, you can address this one.
Yeah, so again, it's funny this question comes up because we were just talking about this with some other potential short squeeze opportunities. Again, I want to preface this again. None of these are recommendations to buy a certain stock. This is just ideas that I've come across that I've just floated and I'm just passing them on to everyone else. So don't think of these as recommendations to buy or sell any stock. We're not financial advisors, but just talking about GameStop particularly, I know it's tempting to go into this kind of stock because it runs up from 100 to 200 to 300 to I don't even know 1,000. But like going back to the question, okay, so discussing whether GameStop has any viable pivot options. I think one of the reasons why the stock actually went up significantly again this week is because it was announced. I think Ryan Cohen actually said that GameStop's transitioning to an e-commerce presence. So why was GameStop heavily shorted? Because it was a brick and mortar in the traditional sense that people thought was out of flavor, quite frankly, right? So if you remember, I've mentioned on many of our episodes, for a lot of these stocks, there's always a catalyst to go higher, right?
Right.
So I think this was one of the catalysts which has sent stock higher this week, right? The e-commerce presence really actually shows that GameStop does have a pivot option, right? If it can develop a hybrid, and I think I've mentioned this earlier on before the whole short squeeze even happened. If GameStop can develop a hybrid of having an e-commerce platform as well as the traditional brick and mortar to basically entertain different consumers, right? Because there is a segment in the market that still wants to go to the store and buy their games, and there's another segment that just prefers to order it online. If GameStop can get market share from both of these segments, then I think that is a viable pivot option. So again, when you saw someone like Roaring Kitty investing in GameStop, he made a very strong case that, hey, this is a viable company. It's been heavily shorted. It shouldn't be shorted the way it is. And it's a viable business. So if Ryan Cohen gives it an e-commerce presence, I think it becomes a viable business again. So I know the term certain doom was used to describe this, but I don't think there is a certain doom. I think there is a possibility that they can recover. And again, we mentioned this earlier as well, and as part of the stimulus deal, if they have a business strategy to adapt to the changing times, they'll be able to successfully navigate the ship. So again, that was a little more detailed than I wanted to go into it, but I just wanted to say they have a viable pivot option that was always in play, but now they have the leadership to execute on it. So I think GameStop's future is very bright. That being said, I don't think the share price should be $270. So that's due for a correction at some point. But I do think it is a viable business.
Right, absolutely. Yeah. I hope that helped you. If you have any other follow-up questions to this, reach out to us and we'll address that as well. Thank you for that, Deepak. So next question here is talk about malware as a service. Okay, so this one I'll take care of this one. So this one's gonna need an exclusive episode. But essentially what it is funny enough, we were talking about dark web during the OSINT section, and this is available on the dark web if I remember correctly on the top of my head, and it's basically people selling malware for money. And there's our viewer who asked this question mentioned Raccoon Stealer, and that's the one that I've heard of, and I believe that steals people's credentials. It's a malware that steals people's credentials. So again, this one's going to be an exclusive topic. I'll do some research on this and we'll talk about it. It's going to be fun. This one's going to be fun. I'm looking forward to this. But this is a fun one. We're going to talk about how this works, because normally you hear about platform as a service and software as a service and infrastructure as a service, right? Normal clouds terms, but like malware as a service is quite funny. So yeah, we'll get into this. Thank you for this question.
All right, and now we have another question that comes in here. There's a two-part question. One's for investing and one's for cybersecurity. So I'm going to read the investing one. So the question goes, as someone whose risk factor is conservative when it comes to investing, what would you recommend for new investors looking to passively invest for the future? For example, I've come across ETFs, index funds, and so forth, but at times there are many routes to choose. In your opinion, what's the best way to you, and what platform or provider is worthwhile to check out? For example, Wealthsimple, Vanguard, Questrade. Okay. So in terms of passively investing for the future, I think ETFs are a good way to go because, again, I think someone who wants to just passively invest has more, they don't want to risk as much capital, right? You want to invest in strong companies for long-term growth. I think an ETF does that. If you are wanting to look at some long-term, like some more speedy growth, let's say, I think you want to go into an ETF in growing sectors. So what does that mean? I think the marijuana industry has an
Cannabis.
ETF,
Yep,
right?
absolutely.
Cannabis
Yep.
industry has an ETF. Psychedelics is an upcoming space. They have an ETF. Kathy Wood's launching space, right? The space ETF, right? All the space travel companies. So you have new sectors that are coming in, growing sectors, who are also part of ETFs, right? So I think it's important in that case to, if you want to outperform while passively investing, you want to have an ETF, that's great, but you should look at new potentially booming industries as a way to do so. And it might be a little more riskier than your traditional ETF, but I think if you want to experience long-term growth at a higher rate than what you normally see, then I think you should probably look at investing again in the more up and coming industry where there's a lot of potential. So I'm just going to continue on here. What platform provider is worthwhile to check out? Wealthsimple, Vanguard. So I actually use TD Ameritrade. So I don't know too much about the other ones. I don't want to speak to them. If you are the type of investor that wants to go after hours, I know Webull is another one where I think you can start trading from 4 o'clock in the morning all the way to 8 o'clock in the evening. Depending on your frequency of trading, whether you're a day trader or not, I think that might be more suitable. Again, like I don't think you can really go wrong with all of these, but with any of these. But obviously, I think the other one is Robinhood, which has is part of the short squeeze. But I think that's another popular one. I haven't heard too many issues there, but again, I'm with the bank, so that's where I have my portfolio set up. But I don't think I've heard many things wrong with Wealthsimple or Questrade. So
one thing I'd like to add here is that the bank, so I'm with CIBC, similar to TD, correct me if I'm wrong, Deepak, they have commission fees. And I believe Wealthsimple and the other ones do not have commission fees. So that's something to keep an eye on. If you're like a trader, day trader, those commission fees could pile up and they could be costly. So just one thing I wanted to point out there.
That's a great point because again, if you're an active trader, then those transaction fees really add up. So keep that in mind. But assuming you are a passive investor with not many trades, it shouldn't make a big difference in the long run. But again, that's definitely a point to keep in mind. So that's great. Just reading on. Lastly, what investment strategy and options would you recommend for the following? 1, passive investing for long-term gains. 2, active investing for short-term gains. And 3, retirement investing, low risk, conservative to balance. So I think passive investing for long-term gains and retirement investing, like this fan mentioned, low risk, conservative for both of these. So again, I think if you're going passive investing, you would want to go into an ETF because there is less fluctuations, and historically they have been able to trend up, right? So I don't think you can really go wrong with an ETF. I do recommend potentially expanding into growing sectors within the market rather than just going S&P ETF. But again, if you have an increased level of risk aversion, then maybe that's the way to go. But that is, I think, a low risk play where you are being conservative while also trying to experience significant growth. Active investing for short-term gains. So again, high risk growth. For the last little while, this has really been your tech stocks, right? So you've seen massive growths in all of the major tech stocks. I think now personally, I'm actually trading more small cap stocks, like the small pharmaceutical companies. Those are really very risky. I'm also in a couple of EV swings, and some crypto swings. Again, these are also very risky, but really you want to, when you're trying to invest short term, you want to see which sectors are hot at the current moment, right? Some weeks crypto is running wild, other weeks it's going down. You want to, again, this is a rule I use. You never want to really invest right at the bottom. You want to be part of the uptrend. Like I like riding momentum, right? I don't want to find the bottom. I want to be somewhere in that middle range where I can ride the curve up, right? Because I'll never be able to figure out when the bottom is. And again, inversely, you don't want to ever invest at the top. So when you are actively trading short term, you got to keep an eye out. Okay, let me buy on a red day. It's simple concepts, right? Like when something in a bull market, like let's say again, I'm going to go back to my cannabis analogy. So I know in the back of my mind, I felt that marijuana and cannabis, like this was going to go up, right? So I felt we're in a bull market, especially when Biden came in. So obviously we saw a massive run in cannabis stocks, right? Now, there was also followed by a huge correction. So what happens when you have a correction in what I consider a bull market? I think that's a buying opportunity, right? So short term, when I see a crypto play go down 20, 30%, and I think crypto's still in a bull market, I'm jumping on that play, right? So again, I like momentum investing, and I like investing in what's hot in the market currently. And I think I still have some EV swings, but I don't think EV is as hot as it was towards the end of 2020. So I'm constantly trying to make sure I'm ahead of the trend in the market. So that's my strategy for short-term investing, but even long-term passive investing. You want to see which sectors of the market have the most room to grow. And Kathy Wood really said space is one of them, right? So that's why she came out with her own space ETF. So if you are in the market for looking for an ETF, that might not be a bad option. But again, if you have a high level of risk aversion, then maybe you do go for the S&P index ETF. Yeah. So again, I hope that was helpful. Again, this is I want to make it clear again for our viewers. I'm not a financial advisor. This is just my opinion. It's for educational purposes only. With any ETF, with any industry that you're looking to get involved in.
He's a part of Wall Street Bets. Don't trust him.
No, I have no part of Wall Street Bets. But yeah, again, make sure you're doing your own research and ensure that you know what your risk tolerance is and how much money you're like. Again, another rule of mine is don't invest what you're not willing to lose, right? So keep that in mind. And again, this is just general advice, what I've seen in the market, and it's not a recommendation, but keep it in mind when you're doing your research. With that being said, I think I'm going to pass the rest of this question off to Syed because it's more cybersecurity focused.
Yeah, thanks for the question. Really appreciate that you're listening to our podcast and listening to both segments. So this question says, could you please touch on below? So the fan included a link, which I'll open in a second. But the question said, this is in regard to the Microsoft Exchange zero-day exploit that the hackers are exploiting in order to exfiltrate mailbox contents. So it's funny because I talked about this in my tech update briefly in this episode. So I'm glad you mentioned it. So we'll take a look at that article in just a few seconds. So the fan mentions, I think this is immense in the sense that many organizations use Microsoft Exchange as their primary mail servers. Absolutely, you're correct. Yeah. And what are the implications and how can organizations combat this? So without looking at the article, I could tell you that Microsoft is on this, and I think they're gonna do a great job fixing this. But again, threats are high, and everyone's on high alert. As you said, everybody uses Microsoft Exchange, right? And for those of your viewers who don't know what a zero-day exploit is, so zero-day meaning that it just comes at you unexpectedly. The vulnerability or the threat comes at you unexpectedly. You have no time to prepare for it. So that's what a zero-day exploit is, and Microsoft has been experiencing this lately. So in their Exchange servers, so Outlook, for example. So the article now. So let's check that out. Once again, thank you for linking all this stuff to us. I really appreciate it. But the article says at least 30,000 U.S. organizations newly hacked into via holes in Microsoft email software. So again, like I said, here's something interesting. So an unusually aggressive Chinese espionage unit that focused on stealing email from victim organization. Multiple sources told curbs on security. So again, this is a Microsoft Exchange server flaw, and they are patching as these threats come. But again, everyone's got to be on high alert here, right? And this is kind of like the SolarWinds breach. Again, I'm not going to go through this entire article. We'll put this below in the description for anybody that wants to read it in their free time. But this just goes in depth about the specific vulnerability that their Exchange server is facing. And again, we saw with SolarWinds, it was supposedly Russian. This is Chinese. So again, this is like a cyber war essentially at this point, and just got to be careful when using these services. One thing I will, there it is, SolarWinds attacks right there. So even the article mentions that it could be connected to the SolarWinds attack. But one thing I do want to say, as I said with the SolarWinds attack, is that we each have to do our part to be, so we all have to be alert. We all have to follow security principles, and with, because this is not under, this is national, this is like a war basically, right? Think of it as a cyber war. So these threat actors can target anytime, right? And many of us use Exchange. It's not like even small businesses, and many of us use Outlook, right? And so with that being said, I would be careful going forward. Exchange, if you're a personal user of Outlook, be careful exchanging information on there. Maybe switch to another email server. There's several great ones. I mean, there's Gmail obviously, but then personally, what I use is Proton Mail. Our email here at the bottom line is set up on Proton Mail. There's also Tutanota. Those are two European based email servers, and I think they're great. But then you also have like Yahoo, iCloud, all those as well. Google, but then Google has their own issues with data and stuff, right? Like they look at your data. But I'll try to move away from Outlook. I'll try to move away from them for a little bit, and even if you are using them, try not to share sensitive information on there. In terms of companies are on high alert as we speak. I'm sure they're doing their due diligence with Microsoft and making sure that if an attack happens, God forbid, if it's 0 day, they know they can react to it. And they probably have like a risk tolerance set up to know that how much risk they can tolerate, right? So just those things right there. But again, if God forbid an attack happens and it's instrumental, we'll see what happens. But I think organizations, especially the big ones, are prepared and will continue to monitor the situation. Once again, thanks for the question. Great question there. And again, link to this article will be in the description. So feel free to check that out. And again, if you have any follow-up questions, feel free to reach out to us via email or whatnot, or Instagram, also our personal Instagrams too. So feel free to reach out to us. And yeah, so those are the questions that we addressed today in our first ever fan mail port segment. So we look forward to keep doing this in our weekly episodes. Once again, for Malware as a service, I'll do more research on it, and that definitely will be something I'll talk about either in a weekly or an exclusive. I'll see what the content is like, and then again, if you have anything else you would like us to talk about or anything of that matter, shoot us a message. Well, we got you. We'll try our best to address it. With that being said, that is going to wrap up our lengthy episode 12. We hope, as always, that you enjoyed our content, and wherever you're listening or streaming. And the video of this episode will be out on YouTube. And as always, you can stream on your favorite streaming platform, wherever you stream. So if you're on YouTube, please like and subscribe. And if you're streaming, be sure to follow our podcast and our Instagram for the latest updates. With that being said, we'll see you guys next week. Thank you.
Thank you for joining us, everyone, and look forward to seeing you all again in the next episode of The Bottom Line. Have a great week.